Hey, Tony.
How's it going, Rob? Hopefully this works out. No technical difficulties. Sorry about Steve. I think this is in the middle of an AGM and it got delayed.
Oh, okay. Yeah, that's fine. Yeah, just talking about copper. Some interesting news from Rio Tinto selling a 30% stake in a mine in remote Australia for 399. A 30% stake for $399 million. I think that bodes well for copper assets globally, especially in places that aren't in the middle of a desert with no infrastructure.
Yeah, like Sumitomo, I'm familiar with them because of my time with IAMGOLD, and they typically only do about 30% ownership of their mine. So they got involved in Cote, obviously at still at a pretty early stage, 7 years away from when it started producing, and they put it on the shelf for a bit too. So what they usually do is they usually own about 30%, and then 10% is owned by some sort of a parent if they want to kind of increase their ownership. But yeah, look, I think it's good for copper, and I think it's good for projects like American Eagle Gold. We've talked to the Japanese many times, and even the Koreans. I think the most important thing for them is they want to put some skin in the game. They want to be part of a technical committee, but in the end game, they just want to make sure they can negotiate an offtake. I think getting the offtake for them is really the most important thing. I know when Sumitomo got involved with IAMGOLD, people have to look at their yearly reports. They're a lot different than what you look at for North American companies, Western world companies. The focus is quarterly, maybe annually for a lot of these big companies. You look at the Japanese companies, and the Chinese are even crazier than them. They do 5, 10, 50-year outlooks. And they want to make sure that they have the copper and gold in their pipeline. So they look at things a lot differently, and that's why the Chinese and even the Japanese have taken a bit of stranglehold in terms of getting some of this offtake globally.
Yeah, it's very interesting. So it's all about the offtake, and they get the first seat at the table, which obviously is important for them. But it's just interesting that that kind of valuation for a deposit, a porphyry deposit that is not going to be operating anytime soon. And just looking at this ore body, so you know a thing or two about porphyries. I'm just looking at this ore body. A lot of it is 0.2%, 0.3% copper. There's only a very small area that's high grade. The average grade is 0.45% copper equivalent, which is pretty typical for porphyries, but it doesn't stand out as like mind-blowing exceptional ore body. And basically if they're paying $399 million for 30%, they're putting up $1 billion valuation on this project. I think that bodes well for copper juniors that might have comparable assets that can be advanced.
Yeah, look, I think Steve just came in the room, but just to finish off on that, I think people here, BHP just did a little annual review. So I'm just going to spitball the numbers. I think they said since 1990, there have been quote unquote 239 world-class / tier 1 discoveries. Of those, only 4 or 5 have been discovered in the last 5 years. So these things just are not coming up. So the new norm is going to be these 0.2 to 0.4% copper equivalent, deposits. And I think the thing that, separates, CuEq Copper, who Steve's about to join the call, and American Eagle is having them in safe jurisdictions really is the difference. If you're going to be putting these $2-3 billion of infrastructure and capital to build your project, you better be sure it's not going to be taken away. And there's just too much risk moving forward, geopolitically, et cetera. Building it anywhere, I think, outside of North America, Australia. And maybe I'm a little bit biased, but that's a fact. I don't think I think the big question is for a lot of these mines, CuEq Copper, American Eagle, it's not a question of whether or not it is going to be a mine. I know they are. I think the question is, are they going to be a mine in this current commodity cycle? And I think the other two following questions are, what price does copper have to be for us to get to that next commodity cycle, and how fast is that price going to get there? And we're looking at, specifically, CuEq Copper is ahead of American Eagle because, they do have a resource, et cetera. But if you look at NAC, when will that thing produce? And you hit a bit of a moving target, which Sumitomo just did. So if you think that thing's going to be a mine in 10 years, what price do you think copper is going to be then? And you probably just start speeding up your development. And these Chinese companies, these, Eastern world, quote unquote, companies, they know that they're dealing with a moving target, and they believe in these properties. They want to be in safe jurisdictions. They believe in copper and gold. So it's a lot different mindset than the North American mindset.
Hey,
Very
well,
interesting.
look.
Hey, Stephen.
Hey, Robert. My apologies to everybody listening. I made the mistake on the timing. We just finished our AGM, and the deal is officially approved and closed. So that's great news. But look, my sincere apologies for being late here.
All good. Stephen Stewart, chairman of the OR Group, and the new, atomic number 29. So yeah, we're talking about copper mining more broadly and some of the deals that have happened, and then we'll dig into the company's assets. I'm just interested. Did you hear about this deal where an Australian porphyry project sold 30% stake to
To Rio.
Yeah, no, it was sold by Rio
Oh, right, to
to
Sumitomo.
Sumitomo for $399 million in total value, $195 million up front. And I just found it interesting because the more I dug into this project, it's in the middle of the desert in Western Australia. And I mean, it's a 500 million ton porphyry, but it doesn't like blow me away in terms of grade or scale. It's not a billion tons, right? So the fact that they were willing to pay for like an earlier stage asset, as much as they did, it seemed to me pretty promising for copper assets more broadly.
Well, I can't speak too intelligently to that specific project, but I did see the headline. So, but those are big numbers, and those are both big groups. I guess the thing that surprised me most is that Rio sold it, although I guess they got a good price. But I can tell you that through our broader group, Rio has been very active and looking at some of our stuff across the group. That includes American Eagle and QC or now XX and same with Sumitomo. And Sumitomo can come at it in a lot of different ways. There's Sumitomo Metals and anyways there's joint ventures they have. So unequivocally, I can tell you over the past 12 months, the strategics, let's just call them that, have been lurking and looking. I think they should have been looking 3 years ago. So I think they're late to the party, really. But anyways, better late than never. So and as I said in our last spaces, Rob, I don't even think it's begun in terms of the cycle, really. So I think we're going to see a lot more of these deals. There's a ton of value because let's face it, juniors are struggling and they're looking to strategics to fill that funding gap. So it is an interesting time. I think there is capital available for good projects, and there's really only, 10 to 20% of the companies out there have good projects backed by good people that are, I think, real. So I think from an investor perspective, and I'm an investor at heart, I have a personal portfolio, but I also buy assets on behalf of XXIX and the OR Group. I think the value available, provided you can be patient, is incredible. And I think over time, and again, the caveat is I just don't know when it's coming, but it is coming, and it's gonna come probably fairly violently when it does come, instead of slowly then all of a sudden, as they say, because there's only so many good quality assets out there. That's particularly true with copper. So I rambled there, Rob, but look, it's love to see these M&A deals.
Yeah, I mean, it feels like there's some action now. The juices are starting to flow. And obviously, look, a 500 million ton porphyry deposit is nothing to sneeze at. And probably there's room for some growth there. But, just looking at the grades, and then I look at some of the grades on your assets and, you've got them beat, So Let's talk about the vision now for the new XXIX atomic number 29, which is copper, Cu on the table, of elements. Very interesting name. It definitely stands out. I don't think there's many companies on the TSX venture who have had so many X's in their company name, but there's a new vision here. So tell us about that.
Yeah, well, look, before I get to the vision, you're right. It is a unique name, and that's the whole purpose. It's to stand out. We have to stand out in any way we can. I think we stand out on the asset basis. I think we stand out as a group in our proven ability to raise capital to achieve our goals. And now we stand out with the name and the ticker symbol, which will be the name. And as you said, that represents 29. If we ever get in the zinc business, Rob, we'll be XXX, but I don't think I could afford that domain name. But yeah, like it's a unique name, and it's fun, and it's people remember it. I don't think they're going to forget it. So it's just part of who we are, standing out. And in terms of the vision has always been with the Opemiska to put. We believe the Opemiska, which was QC Copper's, now XXX flagship asset. It's in Quebec. It's defined as Canada's highest grade open pit copper deposit. We published a mineral resource estimate in January of this year of about 100 million tons at about 1% copper equivalent. In defining that copper equivalent, it's nearly 0.8% copper. So it's very, very copper rich, but you get a nice gold and silver credit there too, which brings us up to, I think, officially 0.97. So almost a full percent. The metallurgy is sound on this project because it is a former producing mine that was operated by Glencore for nearly 50 years. So the recoveries are good. So we're very comfortable with the equivalent calculation and how that's expressed. It's a large deposit. It used to be an underground mine, and now we've reinterpreted it as an open pit mine. And we've done so by taking the 1 million meters that were drilled by Glencore. We stripped them down in terms of going back to the source data, validating them, getting the assay certificates, fixing mistakes, of which there were many, and making it make sense and building from the ground up a brand new geologic model, obviously with the context or the view that it's open pittable. And then we drilled 100,000 meters ourselves to again, revalidate it, fill in some gaps, etc. And that resulted in the mineral resource estimate. And since that time, we've been doing an internal scoping study to come up with a mine plan that makes sense and tweaking things and optimizing things. There's a lot of work to do, and we think that scoping study, which is internal, will be expressed externally in the form of a PEA in early 2025. So that's our objective. We're actually drilling on the project right now to sort of, again, fill in some gaps, particularly in the saddle zone. Working with the town, working with the communities, but ultimately it's about the database. And then from there, we want to move it forward to the pre-feasibility. That's our stated goal. If anybody goes to our presentation, our stated goal is to get the PFS. That's where the rubber hits the road. And so that's where we've been, and that's our vision. We do believe it's going to be in line. It's just a function of what time and how much will it produce. And then of course, this new acquisition that we just closed now, it's called, the company is called Cuprum. The asset within the company, which is 100% owned by Cuprum and now XXIX, is called Thierry. And it's so similar to Opemiska in that it is a brownfields environment, which we can talk about the benefits of brownfields in terms of permitting and timeframes and access to infrastructure. But Thierry represents the largest copper primary deposit in Ontario. So it's got a little moniker, just like Opemiska is the highest grade open pit. Now we also own the largest copper primary deposit in Ontario. And as I said, it produced, so it has all this legacy infrastructure, railroad, grid power, et cetera. It's in a mature mining district of Pickle Lake, which is the same geologic province of Red Lake. So it's established and it's big, and we think it's going to get bigger. And I think where part of the vision for it is to bring it into the pre-feasibility. But before we do that with Thierry, we're going to drill it because we think it's going to get substantially bigger. That's a forward-looking statement, as I always, there's only one way to prove it, but we've got a lot of evidence to suggest that we're going to be right, because right now it's got three main areas of interest. It's got an underground deposit, which is about 25 million tons at 1.6% copper. If you were to cheat and use the copper equivalents here with the nickel, you're at 2% copper, although we don't really state that because we think the nickel recoveries there's a lot of unknowns there. So we just underwrite it based on the copper, but that's nice copper grade, 1.6. And then about 3 or 4 kilometers to the east, we've got 54 million tons at 0.4% copper. And that's where we're going to get growth. So it's just on the precipice of getting big enough to really justify the engineering. And as we controlled this company for the past year privately, we had the opportunity to take what we've learned on the Opemiska. When I talked about taking that 1 million meters of drilling, that is a laborious, skill-intensive process that we took that team and we said, do the same thing on Thierry. And that resulted in our new model, which we've got on our website. And then we followed up with additional drilling to say, does this get bigger? And, the open pit deposit on Thierry is unquestionably, I shouldn't say unquestionably, but it's very clear to us that this is going to get bigger. Now the question is how big? Orders of magnitude, are we going to double it? That's on the table, but there's only one way to prove it. Let's start there. But the drill holes that we pulled out in 2024 and published, and it's on our website, we're getting 200 meters at 0.75% copper equivalent, 170 meters at nearly 1% copper equivalent. And those holes are testing the lateral, east and west lateral extension of that open pit deposit at depth, because that 54 million tons only goes to 150 meters depth. So it's wide open and it's going to get bigger. And then the blue sky is, can we connect those underground and open pit deposits, because they're laterally about 4 kilometers apart. There's little doubt in our minds they connect. The question is where, and does that connection represent additional economic material? So really 2025 is about drilling as much as we possibly can on Thierry and then putting it into the same process where Opemiska is, which is PEA prefeasibility. So look, we have 2 wonderful assets. They're sizable. They're good grades. They've got staggered development process. Is drilling. So growth, excitement. We're going to have a lot of drill news flow coming in 2025. And I think we're going to catch some tailwinds here, Rob. I think people are going to start caring about what we're doing because we got good assets.
Okay, yeah, that's a great overview. A lot to unpack there. Yeah, I agree about the tailwinds, but let's set the tailwinds aside for a moment and delve into this a little bit. So 2025, you're going to drill the Ontario copper asset, but the Opemiska is actually your flagship. It's bigger. It's more advanced. Are you going to generate a pre-feasibility study on the Opemiska in 2025?
No. So we'll not PFS in 2025. We're forecasting 2026, the end of 26 with a PFS. There's obviously some room for not interpretation, but it could take a bit longer than that. But we have costed and budgeted and set an appropriate time frame on achieving a PFS by the end of 26. So we think it's approximately a 2-year process. It'll probably be 2 years from when we publish our PEA. That is the eminent document coming out. So our preliminary economic assessment is coming out in 25.
I see. Okay. So with the Opemiska, there's a lot to like about this project. I mean, just looking at the location, couldn't be much better. I mean, you're within 10 miles of an airport, probably within 20 miles of a major town, a well-known mining region of Canada. The ore body is starting near surface. The shape looks very mineable. I understand why you're seeing this as an open pit now. The grades are excellent. It's big. There's a lot to like, about Opemiska. Why is the market not giving you much value for this asset right now?
Well, I don't think the market is giving much value for anything unless you're sort of in the top tiers. And so I think there's a couple aspects. I'll talk about the hair because every project has hair, and I would say first off, this project is not really well understood. It is not. You talked about the asset in West Australia was a copper gold porphyry. Tony was on before talking about a copper gold porphyry. This is not a porphyry. This is orogenic, which is, and very rarely do you see an orogenic copper primary with a gold credit, but so it's not a well understood model. Okay. So it's unique in its deposition type. So that's one thing. And the second thing is size, right? Everybody's looking for the, billion-ton copper gold porphyry that's going to be in production for 50 years, a la Filo, etc., which is wonderful, right? That's what Rio seeks. And so the mid-tier projects, which this is a mid-tier project in terms of its scale, it's, never say never, but it's extremely unlikely we'd ever get to 1 billion tons, certainly not in the Opemiska as we understand it now. So people ask, is it big enough? I mean, I would suppose that it certainly is big enough. 100 million tons is enough for a multi-decade life of mine, and we think there's more than we've currently defined. And of course, when it's call it, I don't want to say smaller is not the right word, but when it's not 1 billion tons, if you have the infrastructure, that helps an awful lot. So you can get away with a smaller deposit size if you don't have to build the rail and the road, etc. And then the other point, which is certainly worth mentioning, is the fact that we are in a mature mining district, and we have a town called Chapais that is right there. And of course, Chapais was born out of the mine when it was an underground, and now it's an open pit. And so we've never made any confusion about the fact that we're looking to build a major industrial operation at the doorstep of a town. And the questions are, well, how impactful are you going to be in the town? And our answer is, well, we're going to have an impact on the town. There's no two ways about that. But overall, it's going to be a positive impact on the town. We're going to provide jobs and employment and upgrading the infrastructure and economic activity, of which economic activity in the region is declining. And we've given the town a reason for their young people to stay. And so that is something that we've been working on since we acquired this project in 2019 is it's attaining social license, which, whether this mine is in the middle of Nunavut or whether it is where it is in Chapais-Chibougamau, you need to attain social license. And I think our team has done a wonderful job at doing that. And I think that's evidenced by what we put out. We put out a news release in the summer, either July or August, with the town saying that the town supports us. Okay, so it's out there in the public domain. They want this deposit built. Why? Because taxes, right? Royalties, jobs. They need it. We need each other. It's a symbiotic relationship, but you can't take that for granted. They can't take us for granted. They have to support us, and we have to be cognizant of the impacts we have in terms of noise, dust, traffic, employment. We're going to, the local bakery is going to have to pay their people more, etc. So there's all these considerations. But look, so it is why do they not like, why are we not $100 million market cap, Rob? I can't tell you. I think we should be. I really do. I think the value's there. I think we need some tailwinds. I think the project's misunderstood. I'm trying to get out there and tell people what we see. And I do think that scale matters. And that's part of the reason why XXIX was born and the acquisition of Cuprum and how we can get bigger. Because more often than not, in this business, bigger is better. And basically doubling our resource gets more eyeballs on us, both from a retail perspective, but also a strategic perspective. Someone coming in, when I say a strategic, I mean an operator, someone who wants to build and operate one or both of these mines. I think the company gets de-risked because now they've got two kicks at the can, right? I don't know what the future brings. I think we internally we have conviction that both of these assets, Thierry and Opemiska, can go into production, which is the core thesis of any investment that the OR group companies make. You know, can this get into production at some point in time? When we come to the realization that it can't, we don't invest or we don't acquire, because we're long-term owners. And if you don't take that approach, eventually you're going to be holding the bag. So we think both of these assets have the potential to get into production. It's a long and winding road to get there. But if somebody comes in and looks to finance us, we've just, theoretically halved our risk in terms of getting there. And I do think that maybe both of these can go into production. I mean, wouldn't that be a feat? That's our goal.
Yeah, that would be quite a feat. The odds are against you, though. So with the Opemiska, you're going to do a PEA in 2025, PFS by end of 2026. Okay, so that's clear. So moving to the new asset in Ontario, and this is really the focus of 2025, is the drilling at the K2 zone. And I see you've 20,000 meters of drilling in 2025 at this project. Can you tell us about the objectives of that drilling? What are you thinking in terms of the expansion potential? And then what will that drilling, eventually get you?
Sure. So there are four sort of areas of interest. Again, each of them are labeled on our presentation. The first is, we'll call it the K2, which is the underground. There's about 25 million tons at 1.6% copper. 3 kilometers to the east, there's the K1, which is about 50 plus million tons at about 0.4. And then there's the area in between. Okay, so let's call it, the in between K1 and K2 is the third area of interest. And down to the south, there's the J and the G zones, which is another 50 million tons at 0.4. So those are the four primary areas of interest where we'll drill. And it's about expansion and discovery for each. Particularly, call it locally at K2, we're going to look to expand the mineralization as we understand it to the west. Again, on slide 12 of our presentation online, you can see, or investors can see, the western extension is wide open there. We're going to put some holes in there and see how much larger we can make that 25 million tons at a nice high grade. Then again, I would suggest the bulk of the drilling is going to go towards the K1. Whereas that is a lower risk drill program because the geology is very simple. It's never simple, but it's so far it's proven to be fairly consistent. So you can step out east, west, and you can drill underneath it when we did this year. And again, those drill holes are posted on slide 13. Very wide intersections at what I would describe as ore grades over ore widths. And it looked to be getting wider and higher grade at depth, which is always a nice indication. So a lot of the drilling is going to go there because that's where I think we can gain tons quickly. We're certainly going to devote some time and energy towards testing some geophysical anomalies, some VTEM anomalies between those two zones to see if we can connect them because the mineralogy is the same. It's the same system. They're right on strike. That's how these things work. And there's some similar signatures geophysically. So we definitely want to test there and potentially make a brand new discovery. And then down to the south, there's another 50 million tons, and 50 million tons is at 0.4 is nothing to sneeze at, right? I mean, that in and of itself is interesting, but we see the opportunity to learn more about that deposit because we know less. We have less modern data about the south zone stuff, the J and the G zones, but it's clearly there's mineralization there. But if you take a step back, what we really need to do is more education, more learning needs to be done about, what this is, the genesis of the rock. So like we really need to do some forensic geology, if you will, to sort of understand how this mineralization was deposited. Why is K2 so high grade, and what gave birth to the lower grade? So there's all these interesting questions that are never easy, but that's where you can really make a difference, is sort of better understanding the deposition. And while we do that in parallel, there's just lots of lower risk drilling like on the K1. So really, what is it going to get us? The whole objective is to publish a global updated mineral resource estimate. I'd love to have that ready by the end of 25. That might be aggressive to suggest we could be there, but it's not out of the realm of possibilities. But yeah, I'd love to throw as many meters as we can at Thierry intelligently, because you can't go out there with 6 rigs on day one. Otherwise you'll be blowing, you'll be wasting money and not being smart about it. But this project clearly deserves a robust drill program. And that's our focus for it on 25 and 2025. And look, that's what the market loves, right? The market, aside from de-risking and doing what's right for the project, which is, moving it forward on the engineering, the market loves drill results. And that's what we want to deliver. That's what we anticipate Thierry is going to deliver in 25.
Thierry, K2, it just stands out to me. I mean, obviously there's multiple zones, there's multiple areas where you can build pounds, but the K2 zone really stands out in terms of the grade. I mean, 25 million tons at 1.66% copper is pretty special. Now, is the drilling going to start at K2, and is it going to start to attack that stepping out and expansion to the west that you outlined? I mean, is that going to be one of the first goals of the program?
I think we're going to start on the K1 because, again, that's where we understand the most, and that's where the most recent drilling was done in 2024. So I think that's the lower risk. It's all shallow. It's very consistent mineralization. I think we have, more to learn on K2. We certainly anticipate that we can grow it. As is 25 million tons at 1.6, that's interesting, right? But I mean, if you could build tons on there at that grade, that it's obviously interesting. But that would be higher risk than the stuff that we see at K1. So look, we don't have a precise game plan today. We're still learning and still deciding, but it's going to develop pretty quickly in the new year. What we're going to do, and we'll communicate that to shareholders. But again, I emphasize, K1, because look, 25 million tons at 1.6 is great. When you've got that lower grade 50 million tons at 0.4 beside it, starts to be really interesting. I think the name of the game is scale. And so, if we can get scale, if we can take that 50 million tons and turn it into 100, turn it into 150. Again, forward-looking statements, but that's the objective. And where you have scale, that's where you can justify the capital required to build a mill. So that's what it's all about: is building scale, getting enough mine life to make it a commercially successful operation. And then, of course, you've got that high-grade feed, which just really would juice your numbers, right? That would get you across the finish line. That's how we see it.
Okay. If anybody has a question for Stephen Stewart, we'll take a question from the audience here in the last 10 minutes or so. Stephen, just a little background on this project. I'm just curious, how did you acquire it? And I noticed at K2 there was some underground mining done historically. So can you tell us a little bit about that, and when did it shut down?
Sure. So I'll start with how it mined, and then I'll get into the interesting way of how we acquired it. So yeah, K1 and K2 were both historically mined. They were mined by a Belgian mining company called Umex in the 70s. There was not as much production as the Opemiska, but I mean, I think it was in operation for about 7 years. The issue and why it ultimately ceased production is because UMEX overbuilt the mill. I believe they had a 5,000 ton a day mill on site for K2, and they were having problems feeding the mill. They just couldn't generate enough ore from the mine faces underground to feed a 5,000 ton a day mill. So what did they do? They went out and they found the K1, which is the lower grade deposit, and they started to blend the material. So they got bulk from K1, mixed it with the high grade from K2 to try and feed the mill. But long story short, it was too late and it didn't work. You know, I don't know the nitty gritty on all of that, because that was obviously a generation or two ago, but that's effectively what happened. And the property had largely been sitting dormant, and within junior mining companies that had, sort of drill a couple holes a year and that's it. Nobody has owned it since us, or until now, that had, I would suggest, the interest and the technical capability to take all of that data. And UMEX drilled, there's a 250,000 meters of drilling. So it's like pretty well understood. So it's not just a couple of drill holes. UMEX did a lot of drilling, and we've taken all that data and we've understood it, which is a process, Rob. It's a huge process. One that we've become pretty good at. So yeah, that's the history of the production, and the result is this robust model we have now, which is a leapfrog starting point for us, on this project. Shifting back to how we acquired it, it was acquired from a company that was focused on another project. This company, operated by good people, called Canadian Critical Minerals, have a project out in British Columbia, and they were focused on small scale production on their quote unquote flagship asset. They were looking for financing, and they came across my plate, and I said, "Oh, I'm not really a small scale production guy, but I love that asset you have in Pickle Lake. Would you sell me that?" And so that's kind of, and I'd fund your operations. And anyways, that angle didn't work out. But what ultimately happened is that they had debt. They were technically in default of said debt. I bought that debt from the note owner, and basically put that company in a situation where they had to sell. I don't want to say had, but it was certainly in their interests to give us a good deal on the sale, and to avoid any litigious issues or lawsuits or foreclosure, which is never a good thing to go down. We invited them to participate as shareholders in the company. So the vendors are shareholders in XXIX, and that's how we did a nice friendly deal. I said, "Come along for the ride. We see something here. We're gonna make you money as shareholders." And so that's sort of, long story short, how we acquired it. We got it at great, as a result of those unique circumstances, which is sort of how Ore Group has operated for the past 10, 15 years. We get in the trenches. We will find overlooked opportunities that are just sort of not front and center. And we find an interesting way to acquire them in down markets, and even more so in interesting situations, unique situations. And so we got really good value. As a result of that, and I wanted to buy it when we bought it, I wanted to buy it in QC Copper a year ago, but just because of the circumstances, it wasn't practical or feasible, and the vendors didn't want to sell it into QC Copper at the time. So we had to put it into a private company, which we called Cuprum. At the same simultaneously, we had QC Copper by 9.9%. So QC Copper's always been a shareholder, and I think that investment by QC was a tip of the hat, if you will, saying like, look, this is our intention. And after we spent a year going through the database of Thierry and understanding it, remodeling it, we drilled those drill holes, got those assays back, and we felt comfortable that, this is, there's, I don't want to say the real deal, but there's definitely something there, and it's robust and it has potential for growth. And so, it had been quite a work in progress to get this deal past the post. And, I'm so pleased and relieved that, that process is now complete officially today. And I'm really looking forward to the new chapter of this company. We've got a wonderful team with Charles Beaudry and Guy Labelle on the technical and the engineering side, guys that are bona fide, committed, like me, long-term investors and owners. And we've got a lot of work to do. We're starting at a real cheap base. I got to say, this company is totally overlooked, just like Thierry was overlooked. But I think we're going to have our day, and I think the evolution of QC Copper into XXIX is part of that story.
Final question for you, Steve. This has been a very insightful conversation. Cash, how much how much cash does the company have currently? How much runway does that give you into 2025? What will shareholders get for that cash? And then finally, so it's a multi-part question. You feel like you've got your plate full now with these two assets. You've got your work cut out for you. Do you feel you have a clear focus for the company now?
So cash first. QC Copper is about $6.1 million in cash. So it's all hard dollars. So we have no flow through commitments. With closing on Cuprum's got just under $1 million in cash. So, let's call it round figures, about $7 million in cash. Additionally, we own nearly 11 million shares of baseload energy, which is something we're not sellers of today, but we're sellers of down the road when the time is right. So we're fairly well capitalized. Like any junior mining company, we're without revenues, which none of us have. We're always in the business of raising money, almost 365 days a year. The only questions are at what cost and when. And so going back to the crux of your question, we don't need to raise money today. We have runway for the foreseeable future to execute our plans, which includes drilling, which includes moving forward on the PEA and the prefeasibilities, et cetera, et cetera. But I'm always raising money, so it's just a question of when. We don't like these share prices, right? I mean, our value isn't there. So if you don't need the money and you don't like your share price, you hold on and you wait and you try and generate interest by delivering results, which I think we're going to do. So we're relative to our peers, we're an excellent cash situation. And so I think that's attractive for prospective investors coming in. And what was the second part of your question there, Rob? I'm sorry, I forgot as I ran.
Yeah. I mean, you feel like you have a very clear focus now with these two assets, that you've got a full plate. You don't need to make any new acquisitions. You've got your work, set for 2025.
Well, look, we have very full plates and very clear mandates for both assets. So that much is absolutely true. Will I pick up, $1 on the street if I have to pay a nickel for it? Sure, I will. So I'll never say we won't make another acquisition. I can tell you that, on that note, nothing is imminent. We're not planning anything today, but I'm a huge believer in buying assets in times like this, and whether we do it in XXIX or any one of our other vehicles, I'm always looking at assets, particularly in times like this. That's how we've grown the ore group to be, sort of coast to coast. We own assets and we buy them when the time is right. But more specifically, XXIX has its plate full. It's got a clear mandate to develop. Both are in very interesting camps with other assets that I think eventually, when the time is right and our currency is up, present the opportunity for accretive acquisitions. That's what it's all about. I mean, everybody always talks about dilution. QC Copper.
Did I lose you, Stephen? I think I lost him. I can't hear you anymore. All right. I wanted to ask one more question about when the name change will be
Did I
official.
lose?
Okay, okay, I can hear you now. Yeah, I can hear you now. I
Sorry,
lost you for a
I
few
lost
seconds.
you.
Yeah. Are you
Was there a
there?
question? Yeah, I'm here. I got you.
Yeah, okay. Yeah, just a final question. When will the name change be official and what will the new symbol be?
The new symbol is XXIX. The name change and everything is sort of a fait accompli. It'll probably take a day or two for it to trickle through the exchange and the systems for it to appear on, the websites and all your platforms. So, it's really any day now. We don't expect any material delays. So it's just letting it filter through the system, which always takes a day or two. But the deal is done. We got shareholder approval from both companies. It was 99.5%, so it was overwhelming from QC Copper. We got 100% shareholder approval on Cuprum. People like the deal, and we got our fingers crossed.
Stephen Stewart, thank you very much for your time. This will be up on Goldfinger Capital on YouTube tomorrow. Thanks everybody for tuning in. Cheers.
Thanks, Rob.